Hi everyone. In this video lecture, we'll begin a discussion on converting from cash basis of accounting to the accrual basis of accounting. Cash basis of accounting produces a measure called net operating cash flow. This measure is the difference between cash receipts and cash disbursements during a reporting period from transactions relating to providing goods and services to customers. Under the cash basis of accounting, revenue is recognized or recorded when cash is received from customers, and expenses are recognized when cash is paid for those expenses. Under the accrual basis of accounting, revenue is generally recognized when it is earned, even if the customer has not yet rendered payment, and expenses are recognized in the time period the expenses incurred, even if the company has not yet paid for those expenses. Let's take a look at an extreme example. Let's say that Lake Company signs a lease to rent office space for $1,000 a month on June 1st. And Lake Company occupies the office space on June 1st and promises to pay the landlord $1,000 every month for the rent. But Lake Company is short on cash, so they do not pay any rent until October 1st, when they pay the landlord $5,000 rent for the months of June through October. Under the cash basis of accounting, Lake Company would show zero rent expense in their cash basis income statements for the months of June, July, August, and September, and their cash basis income statement for the month of October would show $5,000 of rent expense. Under the accrual basis of accounting, Lake Company would accrue $1,000 of rent expense each month by debiting rent expense and crediting rent payable. Their accrual basis income statements would show $1,000 of rent expense each month, and their accrual basis balance sheet would show a liability of $1,000 for rent payable at the end of June. The rent payable liability would increase to $2,000 at the end of July, $3,000 at the end of August, and $4,000 at the end of September. Then, when the company paid the 5 months' worth of rent on October 1st, the company would debit rent expense for $1,000 for October's rent, debit rent payable for $4,000, and credit cash for $5,000. I think you can see from this example that the monthly accrual basis income statements show the correct amount of $1,000 of rent expense each month, and the monthly accrual basis balance sheets show that the company has a growing liability for unpaid rent. Well, let's try to keep these videos short, so that's all for this video. In the next video, we'll practice converting a few individual account balances from cash basis to accrual basis of accounting. See you next time.